Welcome to Markets Now. I'm Michelle Rourke with Scott Barlake of Coima Bar Lake. Seeing some mixed trade in both grain and livestock futures trade this morning. And Scott, let's start off talking about the cattle market. We're mixed there as well. Live cattle have already been on both sides of steady, but really the big key here for this market today is cash trade development, and we haven't seen a whole lot. So the fact that it's this late in the week, do we have some leverage? Do the producers have it?
Yeah, and thanks for having me. But that's what we're waiting for. The key issue: what's the cash going to be? And I think early on this week we had such a good run last week with cash. All the Packers were out, the majors are out, and that's a good sign when they're leading the charge. And we're in that, turning to red hot cash, your seasonal cash highs here, second, third week of March. So we're right there. And so I think it was just natural that we wanted to ask higher this week. So okay, I'm going to ask 205 this next week then, because it's warranted to do so. Well, then after we've had such a sharp rally in the futures, guys are even unsure what to ask. We know we have the leverage, not sure what to be. I think Packers know they're going to have to be at least 205, but some of the asking prices have even went as high as 208 now. So producers still using that leverage. We still have it, and it feels good. There's going to be some need if those majors are out in front again. We could get a little bit crazy again, because this is when they want to load up on cattle for some of that spring demand that's coming around the corner here.
All right, so the stock market is up this morning trying to recover, but it has been kind of a bloodbath for several sessions, yet the cattle market has held up quite well. What's holding it together right now? Is it this cash trade or is it tariffs?
That's a very key issue, is how, it's amazing how cattle have just fought off that, that stock market, with it just being down. Usually we never leave that alone. If the stock market's down that many days in a row, cattle are affected. So is it because we don't believe that the stock market's really in that big of trouble, or what is it? So it could be a lot of factors. And yes, tariffs is definitely one of them, where tariff wars are bearish every commodity that we deal with, except for cattle. We're such an import beef country, the real ones and the meat, that maybe that can be a little bit friendly. So that's just a little bit of a flagship. If you had some funds looking for a direction for a market to go, you've got a strong uptrending market on tight supply, good demand, and tariff wars are friendly. They finally have somewhere else to maybe be. So maybe that could be one of the big reasons that we've been able to hold this strong, and also seeing the cash, get up and move. And this is seasonally when you can put some nice rallies together. So all of those things together, I don't know if it's one in particular that's pulling it up, but those are great points there.
Yeah, we'll take it at this point. Okay, the feeder market. We made all-time highs yesterday again, and then kind of saw a reversal of some people trying to pick a top yesterday, but we're trying to push back higher. So yesterday's action, profit taking, hedge lifting, what was it, and is it a top?
We are back to predicting whether we're having a high in the feeders again. It feels like we went through a long spell of that. Every time these feeders make new highs during a day and then don't finish at those highs or finish a little lower, you're going to get people calling tops. But for me, we don't have a market that's looking very weak yet. I think it's, from the standpoint of who's trading it, how are we moving? Yeah, if you're long, I think there's probably some opportunities to take some profit there, and you're thinking, okay, that's feeling like a very good price. But seeing that the strength in the back, the deferreds, that's what's impressing me the most. That okay, this is more of a longer term feel that we're going to be higher yet. Before it was, okay, we think we're near the high. Time for these markets to maybe, in the deferred stay down a little bit. If the deferreds are leading, feels like this is a stronger market yet for me, especially on the feeder front, because they're saying, hey, tight numbers yet to come. I think it's okay. And we're not really running into any hedge pressure here. We have, anybody that wanted to put some hedges on or some protection on is already in this market. And you can imagine how many margin calls we've had on guys that have some hedge protection on. So I don't see that new spot. Okay, now that it's this high, we'll see a bunch of hedges coming in. I feel like now it's just letting it go. You have what you have on for protection. You're trying to watch your own, bottom line. But I don't see a big wave of all of a sudden here we have to protect right here. and we're getting close enough to 300. Hey, let's go tap on that window.
Okay. Hog market, we are down this morning. It's not been the best week for the hog market, and cash trade news has been good, but really tariff fears are kind of keeping a lid on things, right?
I think that's for sure. If we have all of this uncertainty and rumors and changing news by the day on what tariffs are doing, and a market like the hogs that really need the exports, they're just not going to be able to get up and go. You feel like the cash has been pretty good. I like what I see there. So the front month maybe can be okay, but there's not going to be any long-term fund push or wanting to establish some very long positions until some of these tariff wars are, we have some deals made, but we're in the first few months of Trump being in office. There's a lot more years to come. So that uncertainty, I think, just overhangs the hogs, and they're just unable to fight that off.
And let's talk about grains, because we've had a little bit of a rebound off of after the recent correction, I should say, the big correction that we had in the grains on tariff fears. But how much farther can we extend that? Or are we just going to chop around here in the grains until we get to the end of the month and more tariff concerns come in, or we have these big reports from USDA?
Yeah, those are great points. Great question. It's the funds have been really long this corn market, and we've seen our pullback from them. We saw a correction in the corn as there was some unwinding of the funds, and now we sit here and chop just a little bit corn and soybeans. And for me, what I'm looking at, yes, I think there's more room to the downside here yet. I'm starting to get this little bit of a negative feel. We got through this WASD report here. There really wasn't any major highlights to feed a bull market. Yep, it kind of confirmed that we have some tighter ending stocks. There's a reason we got to some higher prices, but it's time to turn the page and look ahead. And we're going to have to put some calculators to the amount of corn acres that we're going to plant. And I am on the heavy side of that, even of the heavy estimates. So really feeling like this corn, it's making me nervous. We got pretty close to holding a low here the other day. We're forming a little bit of a wedge, but I think there's some room down. And maybe that's why beans have been able to hold on, because yes, I think some of those corn acres are going to come from the soybean market. So maybe that's what can kind of hold them above $10, rather than we look at this very large South America crop and say, hey, why are we not that worried about it? Probably because I think that acre is going to get hit in the nose here on the soybeans in the United States.
Well, and we've seen some corn soybean spread action going on, and it's probably a result or getting ready for what you said, this acreage battle, right? Or this acreage, I guess, play.
Yeah, I've just heard too much about it, and it's yes, it's in the market. The market knows about it. I understand that we have been talking about it for weeks and months, but we're going to have to look and see what this weather pans out. As of now, it looks like early on we're going to get corn planted in a timely fashion, which means we're going to get a pretty good stand. And our genetics have been so amazing that I think we're getting set up to have a pretty big crop. So when we start talking about possible record corn crop, we have to look to see can we chew through all of this, especially with tariffs and trade war right upon us as well. That's not going to help.
Yeah, and just quick, the funds are still long in corn, maybe over 200,000 contracts. If they liquidate, how much downside risk will there be?
Yeah, they still do have a big position. That's a great point. They're holding on. There was a little bit of a defense yesterday, but as far as room down, we're still sitting here at 449 on the December contract. For me, there's room to go sub $4. I think that it can do that. It's possible, but that's not going to, maybe that's not going to happen until we know this crop's looking pretty good, or maybe we see an acreage number that's really going to surprise people. But I think there is a large correction room to the downside, which makes me nervous on with the amount of funds that are still in this market.
Yeah. All right, Debbie Downer there on the corn.
Sorry about that.
Okay. All right. Thanks for joining us. Scott Varlick with Varlick. That is Markets Now.